Hi there, I'm Irk, and this is my channel, Get Irked. In this episode, Tesla, an electrifying tech company of the future, or an elaborate front for a supervillain intent on world domination. Before we get started, if you could, please hit the like button and subscribe. You'd really be helping me out. Thank you so much. In this episode, we're going to look at the big mama jama Tesla, ticker symbol TSLA. Unless you've been hiding under a rock, you're familiar with Tesla and their electric vehicles, or EVs. However, in addition to being in the EV space, Tesla also focuses on energy generation through solar panels, as well as energy storage through massive batteries called Powerwalls. Although for years Tesla did have financial troubles, those days are well behind it as it's secured funding for the future. Additionally, its car sales are making a profit, so the company is cash flow positive. Tesla's CEO and founder is Elon Musk. In addition to creating Tesla, Elon also created SpaceX, the space transportation company that's partnered with NASA. So when you're talking about Musk, you're talking about a visionary CEO who could be considered the next Steve Jobs. While it's hard to deny that Elon Musk is a genius, he's a bit out there. Musk went on Joe Rogan's podcast, which is also videotaped, and smoked pot live on air, and you may not have noticed, but his cars have a really unique naming system. The models that have been released so far are the Model S, the Model 3, the Model X, and the Model Y. And yes, it spells sexy, and yes, that was intentional. He has a tendency to speak his mind without thinking about it first, which has gotten him in trouble with the SEC, as well as a variety of other regulators in the space. There are also a lot of other negatives that face Tesla, and if you look at my video on ESG investing, you can see that Tesla was an example of what not to do when it comes to taking into consideration environmental, social, and governance issues. Tesla's kind of a mess when it comes to that, between its lithium mining, which damages the environment, the governance issues at Tesla, where he actually has family members on his own board, and the social issues, which comes from how Tesla treats its employees and a lot of the different kinds of work environment stories that we've heard coming out of the company that weren't so hot. So with all of its prospects and its total addressable market, what's the problem with Tesla? Why is it you would be hesitant getting into this investment? Let's take a look at Tesla's fundamentals to find out. As you can see in its last earnings report, Tesla earned $1.90 per share. In doing so, it also beat analyst expectations by selling more vehicles in the quarter than was originally estimated. Tesla's market cap is nearly $1 trillion at $844 billion. That means that it's not just the biggest auto manufacturer in the sector, it's bigger than the entire auto manufacturer sector if you combined it. Additionally, Tesla's PE ratio, or price to earnings ratio, is 444.4. As far as PE ratios go, when you're talking about the tech sector, a value over 30 is considered overvalued in a growth company. However, if you look at Tesla's competitors in the auto sector, you can see that a company like Ford has a PE ratio of 18.34. And even crazier, General Motors has a PE ratio of 6.74. So when you're talking about overvalued when it comes to Tesla, you're talking about seriously overvalued. Of course, it's important to remember that Tesla is a lot more than just a car company, since it has a whole lot of other products that are in development, ranging from those power generation products that I mentioned earlier, but in addition to that, they're always working on something new. Though with that being said, it's hard to argue that Tesla isn't overvalued. But like I've said in past videos, some stocks are just overvalued and expensive all the time, and that's how it's been with Tesla since its beginning. Let's take a look at Tesla's chart. We're not going to spend a whole lot of time where Tesla started, since it did come public back in 2010 at $3.80. Early in 2021, Tesla hit an all-time high on January 25th at $900.40. From its high to its low, Tesla pulled back from $900.40 to its low on March 5th, 2021 at $539.49. This is a loss of more than 40%, and it's important to remember when looking at Tesla over time, this doesn't just happen infrequently, it regularly pulls back 30 to 40%, so you have to go in knowing that. I'm going to start by giving you a buying plan of what I would do with Tesla if I didn't already have a position, and then I'll show you where my position stands and how I built it over time. With Tesla, we're going to start at the pandemic low, and we're going to draw a Fibonacci retracement from the pandemic low to its all-time high this past January. And you can see that that gives us key levels of support where we might be able to add to our position or start a position. Particularly through 2021, you can see that Fibonacci seems to be giving key support for Tesla at $704.82 here, and down around $585 here, here, and here. However, since Tesla hit a low of $546.98 back in May, it's really taken off. Tesla has currently gained 47.65% from its May 2021 low. One of the indicators that I like to use when I look at particularly volatile stocks is called the Relative Strength Index, or RSI, and you can see it down at the bottom of the chart. When the RSI exceeds this purple sector on the upside, it's considered overbought, and when the RSI drops below the purple sector, it's considered oversold. However, you can see historically that when Tesla becomes overbought, it will stay overbought on the daily time frame. So even though it just became overbought on the daily time frame now, that doesn't necessarily mean that it's in for a big sell-off soon. In fact, even when you switch to the weekly time frame, you can see that Tesla stays seriously overbought on the weekly time frame as well. So let's take a look at the monthly time frame, and even then you'll see that Tesla will remain overbought for long periods of time. So whether or not it's overbought on the relative strength index is not necessarily an indicator of whether it's time to buy or sell. So let's switch to the weekly view, and we can find levels where Tesla might pull back and find support. In the past week, you can see that it had an opening this week of $787.65. Since Tesla's in an uptrend, it's likely that it will not break the low of a previous time period. This isn't necessarily a solid and fast rule, but it's what I use to at least start a position. So let's switch to the daily and see if we can find levels of support that Tesla might pull back to where we could actually start our position. $787.65 doesn't look like a bad spot when you're talking about the daily, and it represents a pullback of about 6.5% from where it closed. So this would provide a decent discount from where it is currently, but also makes it so that it's likely it's going to get hit, which means you'll at least be able to start your position here. From there, over time, you can see that Tesla regularly pulls back to the 200-day moving average. And while it pulls back and through the 200-day moving average regularly, it often can find support, such as it did here. So currently, the 200-day moving average is at $708.19, but right here could provide support at $718.62. As I've said previously, when it comes to buying a stock at an area of support, I like to overshoot. In other words, I wouldn't use $718.62 as a target. I might use $720 or even $721 to ensure I get hit. However, if you were less aggressive and wanted to be more conservative, you could use $718 or lower to ensure that it will break support and then bounce from there potentially. After this second buy, I think I would pick this level right about here to start targeting my third buy at about $650. As you can see, certain areas here it doesn't actually pull back below $650. So we could move our target here and make it about $651 or $652. From there, the 38.2% retracement down here at $583.83 does seem to be providing support when you look back here, with this low at $582.88. In order to find more buy targets, we'll have to pull back on the chart. Our next target would probably be $547. As you can see, this is definitely a key level of support throughout 2021. If Tesla breaks the $547 support, it won't find support again until around here at $489.06, followed by the levels that you can see here where we found a lot of support in the past around $410. How low do we want to go when it comes to making price targets? Well, personally, I don't mind not getting a full allocation. In fact, I only rarely get a full allocation by having a stock sell off. I also understand that other people don't like having as much cash on the sidelines and they'd rather get a full allocation quickly. But when it comes to an asset as volatile as Tesla, you can see it have significant sell-offs, particularly if we have a black swan event. For example, in the pandemic, from the high to the low, Tesla pulled back 63.83% from its high. What would that look like from its current all-time high? A 63% pullback of the same nature from its current all-time highs gives us a price target of $325.73. And you can see that this is a key area of support in the past, with this particular day giving us a target of $329.88. For me, I think that would be the low of my price targets. I wouldn't anticipate Tesla pulling back lower than that unless we see a true disaster, in which case you probably don't want to be in Tesla because it's probably company company-specific bad news. So this analysis gives us 8 different price targets to add to our position. For me, because Tesla is so volatile, I probably wouldn't start with a 50% allocation. I'd probably start with something closer to 25%. But as I typically say, with most positions, I do start with a 50% allocation, and then I save 50% to buy in 10% increments on the way down. By taking that strategy, you only buy 5 additional times from your initial time. So we'd have to kill some of the 8 price targets that we have in order to ensure we'd have a full allocation and money to be able to buy should it sell off. For me, my first buy would be at $788, and my second buy probably would be around $720, and then $651.40. However, I might skip the $582 since you can see that down here around $550, it's had more impact. After $547, although the $489 mark does look a little bit instrumental in being able to provide support, I'd actually more likely target the $410 level since you can see we've had a lot more price action there historically. So that gives us our 6 buys, our initial buy plus our 5 10% allocations that we would buy on the way down. If Tesla actually sold off all the way down to $330 and you followed this strategy, you'd have an average per share cost around $603, which would represent a reduction of more than 23% from the $787.65 starting place. And if you're an investor with a smaller size portfolio, don't forget that a lot of different brokers, including Schwab and Robinhood, allow you to buy fractional shares, so you don't have to buy whole lots all the way down if you can't afford it. Fractional share trading makes it so that those with smaller accounts still have access to these high-priced shares without having to overexpose their portfolio because they can buy a fractional share instead of a whole share. So now let's take a look at my own position. I'll show you where I started it and where I stand currently. During the pandemic sell-off, I opened my position with my first buy on March 12th at $111.30. I did my second buy a few days later, right before Tesla bottomed on March 18th at $74.20, which lowered my per share cost to $92.75. In less than 3 months, Tesla doubled from where my per share cost was, so I decided to sell half my position on June 11th, 2020 at $197.36, which lowered my per share cost to a negative $11.86. Because it doubled in less than 3 months, I had to take my initial capital out of the position. That's just one of my rules, and I have to stick to it. I ended up selling some more on November 19th, 2020 at $502.81 a share, which lowered my per share cost to negative $140.53. Since Tesla kept breaking its all-time high, I thought that it was bound to sell off, and it still didn't. However, when Tesla pulled back from its all-time high in 2021, I decided to start putting money back in. My third buy was on March 29th at $606.30, which raised my per share cost to negative $117.85. I did my fourth buy at May 19th at $548.35, which gives me my current per share cost of negative $102.03. Tesla now makes up about 4% of my investments in play portfolio. However, I have no intention to sell any of it until it exceeds the target allocation for the portfolio, which is 6.67%. As for when I'm going to start adding back into the position, I'm going to wait until Tesla breaks down to $600 or lower. If it doesn't get this low, then what I have is what I have, and I'm going to let it ride until it exceeds my target allocation. Despite Elon Musk being a bit of a nut job, I really do see Tesla as a long-term investment, and it will be held in my investments in play portfolio, which you can follow along at GetERK.com. Thank you for watching. Please hit like and subscribe, and I'll see you in the next video.